Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now, in today's video, we are going to be talking about swing trading. We're going to be talking about by far the best strategy, the best approach for swing trading, and how we've taken advantage of all this market sell-off, and we're already up $9,000. So I hope you guys all enjoyed this. If you do, smash that like button and subscribe. And if you guys want to learn more about trading, like how to find stocks, how to build strategies, check out our school. It's called the Swing Trading Masterclass. And guys, we are doing the largest sale we have ever done for the first 5 people that use code MONEY. Code MONEY gets $150 off, meaning the course is only $50 where you guys can learn how to find stocks, strategies, mindsets, private live streams, quizzes, lectures, group chats, everything from mastering swing trading. 5 spots for $50. Check it out, code MONEY. So I hope you guys enjoy it. Click that link, sign up, and let's jump into this. So over the past couple of weeks, we've seen so much volatility from the general market. I want to kind of show you guys here this. This is off of VU, just the Vanguard S&P selling off from 561 all the way down to 442. Now, basic investing 101, buy low, sell high. So as this ETF started selling off more and more, we have been averaging down, right? Continuing to buy the dip. And as we look at this beautiful trend line where it has heavy support here, right? It hits it, buying pressure. Recently sold off down to this level. We had that beautiful move up. Great amount of buying pressure, okay? So we've been averaging down and bringing our average cost lower and lower. So once the market recovers, our average cost is so low where we can make a good amount of money off this. Now, with this stock here, we can go ahead and pull up our handy dandy trading journal here, and we're up like over $9,000 really. Let's go ahead and pull up May. So right now our total profit here is literally $9,600, and we haven't even put our day trades in for this week here. So we are up handsomely as of right now. So people always ask and they go, Carter, what's the strategy? What's the approach? Well, it's very, very simple, to be honest with you. As the market sells off, okay, if we go through another crash, correction, recession, whatever it may be, as the market starts selling off, focus on blue chip, well-established ETFs, and average down as they start selling off. And if they sell off more than 6% in a given week, double what you normally put in. So if you normally put in $100, put $200. This brings your average cost a lot lower. So once it recovers, you make good money. Now, another stock here that really followed our full strategy here was Visa. Visa here has that beautiful upward trend, which we look for. That's the first thing we look at. Step 2 is to look at the RSI, which was very undervalued, right? It hit that 200-day moving average line, which is a heavy support with an undervalued RSI. Great MACD crossover. Going to a lower time frame here, you guys can see just that huge sell-off, okay? Right? With that great breakout with the new trend, right? So it hits this trend line now and establishes good buying pressure. So before you ever buy a stock, you want to build, you want to build a checklist, a set list of criteria. So you're always focusing on quality. So with Visa, another really, really solid trade here. And then another position is SoFi. SoFi stock here has had that great breakout, as you guys can see, where it hits this trend line, set alert above it. The stock popped up, got in near and around $12, keeping our stops below 10 for a push back up to $16, $17. Great risk management, performed really, really well. And you guys can see the great breakout right here, right? It sold off, popped up, average cost near and around $12. Keeping stops below 10 for a push going higher. Great risk management, technical breakout with great MACD that crossover with an undervalued RSI. Just the top 3 indicators. You just need moving average lines, MACD, and the RSI. Another one here, QQQ, just taking huge advantage of that sell-off. And QQQ is more of a NASDAQ ETF, so it has a whole bunch of fantastic holdings in here. We can go ahead and Show you guys Microsoft, Apple, Nvidia, Amazon, all these. And people ask and they go, Carter, well, why do you focus, if you're going to trade, why do you focus on an ETF? Well, you get the diversification a little bit more. So what that means is if that's just say you're in a trade with QQQ and Amazon stock sells off 5%, you have all these other holdings to help balance you out. So it does work very, very well here. Then we got Meta. Meta has been forming that great breakout as well here. As you guys can see, the beautiful breakout strategy popped up, been rallying up ever since. We got Mags, which is doing the exact same thing here. Great breakout, boop, popped up, performing well. Google's the only stock here that we actually lost money on and we're losing money on. But in hindsight, it's really not that big of a deal. It was my fault, and I think a lot of it is just we started averaging down a little too soon. As it started breaking down through that 90-day moving average line is where we started averaging down. So, our average cost was near and around the, 157 area. So we're up a little, but we kind of covered a little bit of some losses, selling positions to get in some other opportunity here, but not that big of a deal, only a couple $100. The last one here is Berkshire Hathaway. Let's go ahead and show you guys this approach here because it's worked out extremely well here. So we had that great breakout, right, where it had that trend, broke out, got in on that trend line, rallied its way up, broke through the trend. We sold about 80% of our shares right here. And the reason why we didn't sell all of it is because I thought we could see more buying pressure as the markets recovered, right? Little did I know, a couple weeks later, popped up the highs at 542, and then they had their earnings where Warren Buffett pretty much put in that he's going to be retiring, and the markets just sold off. So now it did find some heavy resistance on that 200-day moving average line. So not that big of a deal. We're up handsomely on that one as well, just because we covered profit at a really, really good time. So now here I do think we're going to start focusing a little bit more back on the swing trades rather than day trades. But we've been performing very, very well, guys. So if you guys want to learn more about trading, check out our school and don't forget to use code MONEY for $150 off. So I'll see you guys in there. Make sure you guys smash that like button, subscribe, and I hope you guys have a great rest of your day and take care.